What's up, guys? It is Sam here, and I wanted to talk about my weekly earnings from options trading. Today is 5/4/2019. So, first of all, don't forget to press that red button that says subscribe and that little bell notification. Just gently tap on that shit. Okay, so options trading. It has been since March 10th, since I started trading with my own money for options. I am going to tell you what I'm trading and also the underlying I'm trading. Well, just a little bit of context about my experience with options trading. So, I have been interested in finance for a long time and have a lot of education in that arena, just relative to the general population of people who do this for a living might not think it is, but I first learned about options in my final year of undergrad, and I was fascinated. That was like, boom, this is amazing. This is super cool. I learned about options in my final year in undergrad. In grad school, I learned a lot more about them. There's a designation called the CFA, where you actually go through and you price and you build a Black-Scholes-Merton model to price options, which is very interesting. You can create a Monte Carlo simulation to know how these factors are affected, the different Greeks, based upon the input changing, and you do say the first derivative or second derivative of the underlying price movement, whether that's the delta of something or the delta of an option, or you have I forgot what it is actually. It's the derivative of, so it's the second derivative of the price movement of the option relative to the underlying. Anyways, probably not super interesting to most of you guys. And that was my context. I never actually traded though. And I remember opening up an account with Charles Schwab a number of years ago and wanting to do some options trading and realizing that I could not get approved for options trading. I had like $1,000 in there and they wouldn't allow me to trade any options. And so I was like, well, maybe I can get 100 shares of something really, really cheap, and then sell some covered calls on there. And I don't think I ever did that, and I ended up closing that account out and didn't do anything else. I learned more. There's another designation called the CAIA. I learned more in there, and on exam one. Then when it comes to the actual trading, right, because you have the instrument, then you have how it actually trades. There's another designation called the CMT, and I went through in there and I learned a ton about the actual trading of different markets, because the CFA talks more about the fundamental analysis of the actual price, a little bit about the trading, but not much, more so to gauge, to track whether somebody is trading something successfully or not, and the development of a benchmark to track if somebody's trading something successfully. CMT covers, which is a chartered market technician, covers tremendously more in depth on how things are traded, the different technical analysis. It covers a lot of the different technical indicators that are most popular with a lot of people, and different markets, whether that's equity or forex or other things along these lines, and different chart patterns that you're looking for, and all these different things, which was interesting as well. And then, so I didn't finish the CIA and I did not finish the CMT, but I did finish the CFA and my MBA. And at that point, I started working, and I didn't really think too much about it. I still had an interest in it, but I wasn't doing anything actively about it. And then about 2 years ago, I opened up a demo account with Thinkorswim, TD Ameritrade. By the way, I use Robinhood currently. It's absolutely free trading platform. Link is in the description. If you do sign up for it, you get a free share of stock. I also get a free share of stock too, but it's the one I actually use. Not like, I feel like there's some people out there who recommend things who they don't actually believe in. I use it myself. I have my friends use it. I have my girlfriend using it. Like, it's awesome not to be able to have to. I've had multiple different brokerage accounts and you have to pay to trade. It, like, doesn't cost anything. You just literally, it's all electronic. You press a button, right, like a digital button, and then there's a transaction that says Sam owns this now. That's it. That doesn't cost anything. The marginal cost of that, the electronics or the code or software, is so fucking tiny, like multiple decimal places out to the right. Like, it's so tiny. So I think that is interesting with Robinhood. Plus, it drops my break even, right? If you have to pay for a trade, it raises your break even. If you don't have to pay for it, it drops your break even. So it allows you to be more profitable. In my opinion, some people don't think that way, or they think that it's just not as good. But I think they're just set in the status quo and don't want to actually change. But there easily could be plenty of other reasons that I haven't discovered yet. Anyways, now to get into it. Okay, so week ending of 4/26/2019. I'm just referencing my spreadsheet here. I had an account value of $5,849.73. That week was the week where I lost $5,300.40. So if you want to check that video out, go back there. I talk a lot more about that. And so I lost a tremendous amount of money that week. And also, I made a earnings update for the whole month of April. So the entire month of April, I made an earnings update if you want to check that video out. Now, this is just from 4/26 to 5/3 of May. And week over week, I made $1,041.49. That I changed after losing that money. A lot of that was paper losses. I maybe lost like $1,000 or $2,000, probably close to $2,000 of actual from trades that were bad that I couldn't roll. So I was able to take a lot of those positions and roll them into expiration of 5/3, which gives me more time to see if they play out in my favor. Some of them did, some of them did not, and overall, I had $1,000 profit in the week, but I definitely had a few positions that closed out at a loss. There was a couple in Tesla. Tesla had a really dramatic move down, excuse me, and then starting to have a really dramatic move up. I think as of Wednesday or Thursday, it started to move up, but not enough to have it make sense or whatever. So I closed out that Tesla position. I think it was around a $400 loss. But overall, the whole entire week, I still made $1,000. The other big shift that I had from being able to close out, so I closed out almost all of the positions that I had paper losses on that week ending on 4/26, except for one. I have two contracts on Tesla. It's a put credit spread above the market, which, yeah, doesn't make sense, right? Because it moved down so far. But I was able to roll it out to August. So I have a good feeling about that. I think it's already making money now this week. It finished up with like about $130 in paper profit. So I could close it out this coming week, but I'm going to give it probably another week or two and see if I can close it out for a bigger gain on that one. That was a one that I rolled two contracts from the other week where I was losing. It's a 60-50, a 260-250 put credit spread, but at the time I think Tesla was trading at 270 something, and then it just shot down and shot down and shot down, and then Tesla was like down to 238, 239, and it was like $20 below 50 or the 60, so it was like super substantial loss. And almost the maximum you can lose on something. But also, really, this isn't like the maximum you can lose, but in reality, you can almost never really lose the maximum if there's any time value in it, because there's that factor that the probability of them having these drastic swings on high volatility ones plays to your favor, even if you have a losing position, because then you can close out a losing position, generally speaking, for less than what the maximum is on the trades or whatever. So this coming week, I've also changed the mindset I have going into things. So for prior to losing that $5,300, I was trying to, make $2,000 a week roughly from a $5,000 account balance. That's crazy, right? Like, think about that. How much risk you have to take to do that. Well, so it worked. It was working, right? Like, the average for the 3 weeks before that was about $2,000, $2,100. Like, I was making around $2,000 a week. Absolutely insane. And then I had this substantial loss. So I'm going to continue, but just change the expectations I have mentally to shoot for something more in the $500 to $1,000 as until I get the account value up a little bit more than what it is. So shooting for something like $1,000 a week or $500 a week, I think is a lot more sustainable. And because the dollar amount is substantially less than $2,000, I believe that the probability of sustainability to sustain that $1,000 a week is drastically higher than it is at $2,000 with this account balance. So what I'm trying to say in a more complicated way is I'm able to reduce the amount of risk I can take to make $1,000 versus making $2,000, right? Because if I'm shooting to make $2,000, then my contract size might be a little bit bigger. Which is the position size, might be a little bit bigger. The in the moneyness or the out of the money, I might be closer to being in the money to be able to collect more premium. I might take positions that I might not otherwise consider taking because I'm trying to shoot for $2,000+ a week. So when I shift the expectation to making $500 to $1,000 a week, I'm able to reduce or minimize that position size and go further outside of the money to be able to reduce the amount of risk that I have out there, or manage the risk, right? The risk might be the same, but I might be able to manage it in terms of the risk of loss. The same dollar amount might be risk, but the probability of losing that is lower. So that's what I'm shooting for. As I continue to ramp up the value in the portfolio, I will continue to consider these things as moving potential targets. But I want to wait, till I get closer to $20,000 and $30,000 before I start changing some of these things potentially. But obviously that could change by the end of the month of May. Stay tuned and don't forget to subscribe, because these I'm doing these videos every single week. Whether I make money or whether I lose money, I'm gonna let you guys know how I do that. I think that there's a tremendous amount of people, so don't forget to subscribe and pass that bell notification. There's so many people here who maybe aren't making it, I guess you could say, and then there's so many people over here who have already made it. So these people will say do this, that, and the other thing, but a lot of times they have a vested interest financially if you follow that path, right? Like whether they're doing a course or consulting, or they have a business that sells whatever they're fucking trying to do. And these people over here a lot of times don't have, from my understanding, have a clear path of what to do. And there's a giant gap here in the middle where the path is not necessarily documented. So that is kind of the essence of what these videos are for me. And to document the journey from here to here, so I get to show people exactly what I'm doing, how I'm doing that. So if you guys have any questions, let me know down below in the comments, or reach out to me on Instagram. Link is in the description. I will get back to you. Peace.